This is Reuters, I'm Axel Threlfall. Africa may seem like an unlikely place to invest in times of great uncertainty, even for investors with a great appetite for risk. Indeed, stock market indices in Africa's frontier markets have slumped since the onset of the financial crisis. But my guest today thinks the long-term investment case for Africa remains intact. Dr. Ayo Salami is an investment manager at the Duet Group and runs their Duet Victoire Africa Fund. Ayo, great to see you again. Thanks for coming back.
Thank you very much, Axel. It's a pleasure.
When we last spoke, that was back in April. You were down about 40%. How's the fund doing now?
Well, the fund to date, for the year to date, we have sort of flat. The fund is, performance up to the end of June was about minus 2%. Since inception, if we were to take a longer period, when the fund started in December 2007, then we're down around about 35%.
And what's the target for you? Are you expecting growth from here on?
We're expecting growth from here on in.
Based on what?
Well, the fundamental performance of the economies is what gives us comfort about the outlook for African equity markets. If you look at the performance of the companies themselves, the corporate sector has continued to deliver earnings growth. Last year, earnings growth was around 32%. This year, it's going to be around 20. It's going to be between 15 and 20% earnings growth. But what is unfortunate happened is that the liquidity, there's a liquidity. Liquidity has all but dried up. And so when you have one seller, you find everybody's on what we call, they're all on offer. Everyone wants to sell at the same time, or everyone wants to buy.
So with liquidity like that, looking like that, with the economies pulling back, what is going to drive the growth? What is going to drive growth of this fund?
It's domestic demand that we think is going to drive growth in Africa. Demand destruction, the kind of fall in consumer demand that has been experienced in the advanced economies, has not happened in Africa. Although global commodity prices have fallen, their impact on Africa has been taken in exchange rate. So we've seen currency devaluations. Rather than, the African consumer, his spending power remains intact. And that is what we look for to drive these economies and corporate earnings.
When investors say Africa is just a commodity play, what do you say to them?
I say, well, they should look at Africa properly.
Okay, let's talk about the way you invest with this fund. It's a passive investment vehicle. Nervous investors, why would they want to go with a passive stance rather than get someone to actively manage?
There's a big debate. There's a big debate as to whether you go active or passive in the emerging market. Long-term investors, say a pension fund, whose investment outlook is 10, 15 years, and when they match their assets and liabilities, would like a passive play. Because what a passive play does for them is that all they're looking for is exposure to the general growth of the region. Whereas private sector investors...
The New Star fund that you bought is an active play.
That's an active play.
How's that doing now?
That's doing a lot better than the passive fund at the moment. But I think there will come periods in time in the future when the passive style of investing will outperform the active
When's that switch going to happen?
It's always, if I could forecast that, I would I'd be a lot richer. We don't tend to know, but what you tend to find is that over a long period of time, the ability of active funds to outperform passive funds, it's usually quite marginal. Say if your investment horizon is 15, 20 years, I think you will, what you end up getting is just the general growth of the region. But over short periods of time, there could be periods when switching between active and passive investment styles will be beneficial.
You exclude South Africa, right, in this fund? Why do you do that?
Because at the moment we think that what we are trying to do is to provide investors with an access to the markets which are more interesting. And if investors wanted access to South Africa, there are lots of other products. South Africa is about the 8th largest
More
market.
interesting but perform less well, right?
No. I think over the longer term, growth is going to be stronger in the frontier markets than it is going to be in South Africa.
Let's talk, sorry, just to finish up with Ayo, I want to talk the big picture again, the growth story which this is based on. When we look at FDI, when we look at remittances, it must be tough right now in this climate.
It's challenging, but it's not as bad. Remittances are down only 10%. FDI is down a lot more. But I think FDI flows have simply reflected the global, what I call the flight to quality, flight to safety. In period, once risk appetite comes back again, I think investors will look at the fundamental case for which Africa represents, and that remains intact. And this is based on the issues of the institutional changes we've seen, macroeconomic growth, the demographic advantage. That's a big thing that people don't yet focus on. That in Africa, over 50% of the population is under the age of 30. And in 10 years' time, that's going to make a lot of difference to an investor.
Very, very quickly, to finish up with, what sort of companies do you like mainly in this area?
We like what I call the BBCs, banks, brewers, and cement.
All right.
And then we add telecoms onto that.
Very good. All right, many thanks for coming in.
Thank you very much.
Salami from Duet Group. That is it. To find out more on the latest issues impacting the fund industry, why not join our global investment blog, blogs.reuters.com/global investing. That's it for the show. Join us again at 11 G. We'll be showing Prime Minister Gordon Brown's monthly news conference live. Thanks for watching. I'm Axel Threlfall.